start with, because we're talking about kind of a big subject, right? What happens next? I introduced you, but just if you could each briefly kind of give me a sense of where you're coming at this from. In other words, how it touches your life and your role, so people know where to place you. And we'll start with you,
Sure.
Because you sat so far away from me.
There you go. That's my punishment. And payment system modernization is the biggest thing that I'm going to end up leading at our bank in my career. No two ways about it. This is going to be transformational in terms of how we deploy payments to serve our clients, whether that's corporations, whether that's individuals, whether that's the fintechs that we proudly partner with, or how we deliver services to all those clients. So I'm really motivated to make sure that this knocks it out of the park. But I'm also motivated to make sure that we don't repeat any of the problems that we've had in the past, because collectively our track record has not been always knocking it out of the park. And so that's the piece that I'm also wanting to make sure that we're cautious but optimistic.
Lib?
We were talking in the corridor earlier, Andrew and I, and having launched Sympatico in Canada, I remember back to 1996 when I was old even then, but younger than now. But one of the things we had to launch in conjunction with the ISP was a website that was actually a curated set of links to websites that were worthwhile going to. And the reason we had to do that was because nobody could think of what to do with the internet. In 1996, the main impediment to people signing up for internet service was they didn't know what to do with it. So I think that as we look at the modernization of our payment systems, we've had a lot of discussion of use cases and applications and things that we see in the nirvana of the future. But I really think 10 years from now, we'll look back and say, gosh, we didn't even begin to think of what we could do with this new platform on which an ecosystem of brilliant people, incumbents and new entrants, could actually develop new applications. So I think we're going to repeat some of what happened with the early days of the internet.
Great. So my major focus is trying to build EQ Bank. So unlike some of the other bankers you may have heard today, we have no branch network, so no legacy branch network. So we have to take that as an advantage and try to build a great customer experience in a digital world. Really the first digital bank built in Canada on a mobile-first platform. So we're pretty hardcore digital bankers. So we hope that we will never issue a checkbook. We don't actually have checking accounts. We view why do banks have checking accounts in a world with no checks? It doesn't make any sense to us. So we're really trying to improve that digital experience. And this is really where Payments Canada fits into us, into our world. We think that really the core function of a bank is just to store value and move money easily. If we can add some other value-added services onto that, that's great. But that's the core value of banking. I know if you go back to reading Bagehot from 1870, that was really the value then, and it's the value today. And technology and the real-time rail can really enable that and give our customers a better life, is the way we think about this.
So one of the reasons that newcomers can disrupt, with apologies to Brian Porter, incumbents, is that incumbents are locked into legacy processes, system structures that are often more expensive, cumbersome, and getting rid of them is too hard. It's too hard to keep running your business and start from scratch. As we have this conversation, I've been curious, and I'm going to start with you again, Todd, because I think it's probably right in the wheelhouse of what you're trying to do. If you were starting from scratch today, what would it look like? What would you not have in your back end?
Paper. So if you cut through all of the source of the core problems that we experience in terms of being able to do things at speed, they usually end up involving paper in some way, shape, or form. We've had these circuitous things that we've done in the past, and we thought we were getting more efficient by taking the cow paths and paving them. The better approach is saying we want to go from point 1 to point 2, and we're going to draw a straight line between those 2 points, and we're going to do it through digital enablement. So when you look at how we are going to meet the folks that are contesting for our clients' hearts and minds. So this is about open competition. The basis on which we are going to beat them is that we are going to serve our clients better. So we wholeheartedly believe that with incumbents and with new entrants, we can deploy technologies that will delight our clients. And straight through end-to-end processes that work in real time are core to that success.
So in some ways, Andrew, you had the luxury of saying what would it look like if we started from scratch, at least on a relative basis. I'm guessing you're not running COBOL.
No COBOL, of course. I mean, we're running a Temenos. So
who knew that my son should be learning that code?
No, I mean, I think one of the things that's nice for us is that we actually go out and have made a value proposition to a set of customers that actually want to deal with a digital bank. So, you know, if you're working for any of the big six, you have to handle my mother on one hand who wants to go into a branch and be fussed about, and somebody else that wants to have a 24/7 service. And so we've been able to go and say, you will never have any paper from us. In fact, we'll never send you a bank statement. You can never have a bank statement from us. It's not a choice. And the customer comes in knowing that that's the expectation. There never is a piece of paper. So you sign up on your phone with no paper in the first place. So we don't have paper to get rid of. The nice thing though is believe that we've also got a set of customers that have bought into the value proposition we're making to them. So there's no mismatch between how we're trying to run the bank and their expectations. And I think that's a huge advantage potentially for us. Now, of course, it means we're only a narrow bank. We're not addressing the needs of the entire population. But it's a narrow enough segment that it's quite meaningful over time, we think.
One thing I wanted to talk about, and Lib, I'm going to ask you to start this, but I think you'll all have thoughts. I mean, the real reminder, one of the things that the summit does is give you the real multifaceted sense of what this system encompasses. And so you've got this huge innovation, and I want to talk about what comes out of modernization and real time. But today, this reminder from the Bank of Canada and from the regulator that there's also some stuff here that you can't mess around. We can't Uberize banking, right? I mean, there's some stuff that we need to keep heavily regulated, heavily monitored. How are we doing, Lib, I was joking about bringing the regulator up to speed, but there's a reason why the regulations will move slowly. How are we doing on that front?
Well, I liked someone's expression, and I actually can't remember who it was, calling the back-end payment system the circulatory system. I get in trouble if I ever call it the plumbing, which used to be the word we thought of it. But that's a sort of an underground, dirty kind of thing. But the circulatory system, I think, is a great image because it's really the heart and beating soul of the financial system. So that has to be not the kind of thing that you say, well, we'll try this application, we'll implement it in 8 weeks, and then we'll see how it goes. It has to work. What you want to do, though, is to create that circulatory system such that it has, APIs, but, interfaces, connections, abilities for anybody to build on top of it, whether that's a new entrant or an incumbent. And I think the parallel part of this that is incredibly important is all of the thought that's going into how to open up that system to be accessible to more people. And to enable you to use the system, not because of who you are, but because of how you do business. Are you reputable? Do you have a collateral to put up? Do you have risk management capability in place that you're not going to bring the system down? And if you satisfy those criteria, it shouldn't matter how big you are or how long you've been in business, you should be able to have access to the system. And that's the kind of platform that's going to create a fertile field for innovation in Canada.
Continue with the idea of the human body. There's an immune system, right? And I like it because I think it actually dimensionalizes things. So if you look at the immune system, the work that Payments Canada and Finance and the Bank of Canada are doing around establishing a risk model. If I'm a fintech and I decide, gee, I'd actually like to have all of the address information that went along with our payments, that's a massive violation of privacy. And so under certain constructs, you can see how information that might be sensible to go along with a payment actually shouldn't go along with a payment. So I think one of the most transformational things that we will be accomplishing in this payment system modernization is having data flow with a payment. But with great power comes great responsibility. And so we need an immune system somewhere in this to make sure that the right thing that should occur actually does occur. And when it doesn't, the roles and responsibilities are clear. So when there is a party that fails to live up to an obligation, their ability to continue to execute the same type of transaction shouldn't persist. And if we do anything which jeopardizes the rights of individuals, their privacy, puts our system at risk, or otherwise creates inefficiencies, we haven't done our job. So however we go about this, we need to make sure that those core fundamental principles are maintained as we move to a better future.
I actually think we're doing quite poorly, I think, from a regulatory integrated view of the world. So, we have, on the one hand, the pretense of PIPEDA that we've got privacy, and then all the banks are reporting millions of transactions a year into FinTrack, who uses them in who knows what way. And then I think, frankly, it would be really a great kind of call to action as a nation that we should try and become more cashless. So get rid of cash. There's 800 million, I believe, of $1,000 bills circulating in society that are basically being used by criminals and tax evaders to make payments. We should really be encouraging, let's be Sweden. Let's try to be cashless. We're a country of law-abiding citizens where most of us pay taxes and expect our fellow citizens to pay taxes. And I think part of the payments modernization could easily be to have a rallying cry to get more of us paying electronically, so there's a record. Then you'll know where the crime is. The crime is where the cash is, frankly. And then I think that's something we should be aspiring to as part of this process.
And I think we all have to take into account the fact that younger people are willing, even more willing than older people, to trade their privacy in return for convenience. And if they haven't given us that permission, of course we should respect their privacy. But I remember working in the telecom industry, and the statement there is mobile telephony will never go, because everybody's going to have a home phone, because nobody is going to be satisfied with a phone that won't work when the power is gone. And in fact, that was proved to be totally ridiculously false. People work on their cell phones, and if the power outage is long enough, they actually will have a cell phone that maybe they'll charge it in their car. But basically, they don't have the reliability of the service that they used to have from the telephone companies.
Just to take small issue with the point there.
You?
Yeah, wouldn't be the first time. I'm not convinced that we should allow people to do things that are actually not good for them. So if we look at elements like privacy, I have two 19-year-olds. They do a lot of things that I probably did when I was 19, but hard to condone. And so you look at, in today's world, you'd say, if we know something isn't right, should we turn a blind eye to it? And I don't believe that's true. I believe that we have an obligation when we set up the standards for how the system works so that we protect people from what they know and also protect people from what they don't know. I don't believe that we should go as far as the nanny state, but I think we have a duty of care. I think we have a duty of care.
But isn't one of the potential innovations, I mean, you mentioned data rich is a huge part of this, and it does seem as though when we get towards real time, information is going to be one of the first places that innovation happens.
Absolutely.
And works, especially for the folks inside the system, maybe not consumers, but for you guys. Can't we innovate around that? Can't we trade data in a way that does encrypt it or protect it or?
ISO 20022 is a good, transparent communications protocol, right? So when we look at what is consistent, so our ability to be successful in the world of payments has been about having consistency, transparency, and ubiquity. So knowing what is available and being clear about what's permissible to share so that we all know the rules of the road and that they apply whether you're a fintech, a new entrant, an incumbent, a government, or a regulator. So clarity is what I think is the most effective outcome.
Well, I'm a big fan of the nudge approach. And I would say rather than a nanny state, I would say maybe you encourage people, you warn people about the dangers of giving up certain kinds of data in return for convenience, but you don't preclude them from doing it if they want to do it.
So where we come from philosophically is that we're stewards of our customers' data only. It's the customer's data, and they need to be able to use it in ways that are valuable to them. I agree with you, Todd. It's got to be permission-based. We can't just throw it out to some wild fintech who's going to put it up on the web or whatever. On the other hand, we are only the custodians of that data. I mean, that transaction happened, and that customer created that piece of intellectual property by making that transaction, and they should have access to it as they want to go through life.
Yeah,
and I think
and that's a point, you know, that people are always complaining about the healthcare system, which thinks that they own our personal health data.
Right.
And, you know, when you think of how frustrated you are about that in the healthcare system, when the doctor won't tell you and you say, that's my lab result, you know, the same kind of feeling can be true in the financial system. Absolutely. When someone, you know, doesn't let you use your data the way you'd like to.
Yeah, and I think that's the piece about privacy by design. It's a really powerful concept. And being able to say we're going to empower people to make good choices. You know, but I think we all need to be clear about what those choices are. It's not okay for us to empower terrorist financing. It's not okay for us to empower money laundering. So there are things that we have agreed are not in the social interest, right? And so figuring out how we balance those obligations while also allowing people to unlock their data in powerful ways.
Yeah.
So when we think about the kinds of innovation that will emerge, what do you guys think about when we're talking about real time? What does that begin to enable that gets you excited?
Well, I mean, for us, the obvious things are just having a store of value in our bank being able to be used as cash today. You know, today, somebody wants to buy a stock, but they want to take money out of their HESA. It's going to take us 2 or 3 days to get it across the banking system. I mean, so you know, one of the jokes we always have when we come here and we listen to talks about artificial intelligence, what we first all need to do is eliminate the artificial stupidity of some of the systems, frankly. That there is really, you know, there was one bank, for example, where actually when you try to move money between your savings account and your checking account, it actually takes a day within that bank. I mean, this is unbelievable lack of focus on the consumer, right? So getting that customer lens and thinking about, well, I want to park it in a savings account where it's good value, but I need to be able to use it. When I want to buy a car, I should be able to take it straight out of my savings account. I shouldn't have to wait for it to clear across into another bank that's going to take 2 or 3 days. So I think we'll actually see an incredible emergence of really great business ideas as soon as cash in an account becomes kind of spendable in the minute. And so I'm looking forward to kind of seeing the entrepreneurial energy layered on top of that rail.
I think it's good that we've got a clear focus on the consumer and would agree with what Andrew's saying. I also think we have to remember that we've got corporates, governments, and an economy that we want to be successful on a global stage. So enabling the ability of Canadian companies to conduct frictionless commerce with their suppliers and customers overseas, I think is an important outcome that we need to have front and center in terms of how we go about this modernization. So there will be more rather than fewer global payment standards in the future. You look at Alibaba and Financial having bought MoneyGram. You can see the seeds of a potential global payment platform to remit money to Asia. And so today I was on a panel earlier with Swift. Swift is a great platform, but there will be others over time. So finding ways to ensure that Canadian corporations, small businesses, individuals can easily transact outside of the country.
Liv, any thoughts?
Oh, the only remark I'd make is about the real-time part of it. I'm not that excited about real-time. I think really fast is important. Near real-time is important. You know, we heard earlier in one of the breakout sessions, there was a discussion of the Australian system, and the Australian RFP for real-time service said should be less than 15 seconds. You know, so we have to remember that real-time is never quite real-time. And there's a great variability. If you're at a point of sale, real-time really, you do want it as close to real-time as you can because there's people in lines behind you. But if you're ordering something online, you have a little bit different tolerance for what real-time is. And if you're a big corporate sending money to Germany, you don't need it in 15 seconds even. But you don't want it tomorrow or 10 days from now or somewhere in the cloud where you can't track where it is, but it's not real time. So that would be the only comment I would make. I think the other attributes of our modernization are actually more important than specifically real time. I just think fast is really important.
One of the things that emerges in these conversations, and it comes up actually around information sharing. You'll talk to I've talked to fintechs who want to partner with the banks, the existing banks, and they run into frustrations because the banks are very guarded about sharing information, reasonably so. But it creates this kind of, you can't manipulate data you don't have. So they've got a good idea, and you've got the data, and nobody is really willing to put them together. Todd, can you talk just about the tension in that? I mean, you're all partnering here, but you know the old saying, culture eats strategy for breakfast.
So I'll take two really good examples, Borwell and Thinking Capital. Great organizations to partner with. Why? Because they have an adult, thoughtful approach to how they live up to the same obligations that we have. We have the same client. And so one of us doesn't have a duty of care, and one of us says, hey, I can avoid all of that. So we partner with people that respect the obligations that are the right obligations to make, which is a standard above that which is regulatorily required. And so the best advice I can give fintechs, it's not as though there are no rules in life. It's not as though the information is yours. You have an obligation to those that you serve to watch their interests. If you build a business model that empowers the individual and doesn't abuse the rights of data, then you're going to have a great business model. And so it's those types of partners that we seek out because ultimately they are the ones that are going to be successful and their values align with our values.
But you mentioned business model. And I think one of the difficulties is when you look at disruptive innovation, it's not disruptive technology, it's disruptive business models. And the problem is that often as you go from the analog world, you go from dollars of revenue to a digital world where you have cents of revenue. And it's an old expression, analog dollars, digital cents. And one of the difficulties, I think, is that the new entrants are digital natives. And they're kind of okay with living with cents of revenue. And the incumbents really need the dollars in order to continue to oil their machines and their particular structures and overheads and so on. And I think, I'm surprised you say that it's solely this attitudinal change. I would think that the difficulty of aligning strategic objectives on business models would also be a difficulty. Does that not run into a problem for you?
I think it's a great observation. Didn't say solely because there's a bunch. But if I get at the business model question, I think some of the mythology that I get exposed to is the cost of acquisition in digital channels is low. So if I look at our cost of acquisition to get a client relationship, to sell a product, and I compare it to what a bunch of the fintechs are paying in terms of digital media and search, click payments, they have a cost of acquisition problem in the main. So when we are competing against other organizations that are providing a specific service, right? So software as a service enabled digitally versus software as a service, kind of done through bad old technology, that's a DOA circumstance. There's no ability for an analog service provider to operate in a digital environment. So we need to make sure that we, as banks, don't fall prey to that. But when it comes to the business of acquiring a client relationship, deepening that relationship, and monetizing it over time, we have great advantages in terms of the scale of our platforms, the size of our client base, and the ability to go from face-to-face to digital and back to face-to-face. Our branches are going through a renaissance in terms of their ability to deliver powerful customer-centric advice along with electronic channels to enable them to transact.
I'm sure you're dying to leap in there.
Well, I mean, I think all you're saying is true. And one of the interesting things so we get a lot of fintechs coming to us because we're a small bank and it's not that hard to see the CEO because he's not doing much most of the time anyway. But we align with only 2 or 3. So I go to every Borrowell board meeting as the CEO of Equitable, so I can put the full resources of Equitable behind Borrowell, and it knows it's got sort of that care. And that, by the way, we back them because they are a superior executive team for sure. So Eva and Andrew, they run that company, and they had a business model that aligns with us, right? So it makes sense. We're going to have 2 or 3 fintechs we work with closely at any one time because we're a much smaller organization, we can't give them the care and attention. But companies like RateHub, Alyssa at RateHub is a great example of a superior executive building a fintech type of model. And when you go to Europe, we were looking at a company called Loot in Europe recently. The 24-year-old chief executive stuffed in with 30 other keen people building a bank on the South Bank in London. There's no way that even an equitable small bank like us can compete with that kind of cost structure, right? So there's lots of opportunity to think about fintechs doing really clever things, that, in that case, servicing the student market. And I think we should be trying to encourage that. But with all Todd's provisos around, they've got to understand there's privacy issues and regulatory constraints, but allow some of these younger businesses to serve more narrow niches than we can.
It's interesting. I was looking at a headline, and the media like to create kind of false paradigms just because. And it said the Ripple versus Swift rivalry. And then when you read it, it becomes clear that they're kind of doing different things and have different use cases, and there's not really a rivalry at all, although the Ripple guy is really rude about Swift, I will say that. But we are in this world now where these new entrants are quite fragmented. So to the bankers here, I want to ask, do you get nervous when Square issues a debit card, as they just did? Do you think that's a client I'm never going to have? They might come to me for a mortgage, but they're not going to need me for that? Or is it just an add-on to what you're doing?
Yeah, so if you look at the Square, providing a debit card to its client base, so long as it's riding on a network and it's taking on the obligations associated with riding on that network, that's what the marketplace is about. That's open and fair competition. Square's got a really interesting business model. There are certain merchants that love it, and there are certain merchants that say that's actually not a good deal for me. I think it is paramount that in all the things that we do, we're saying we need to make sure that we're enabling competition and that we're providing great infrastructure to enable things like a debit account, a checking account to ride over. Because we'll have better solutions for our clients, when we have things like that. On the Swift versus Ripple rivalry, there will be a multiplicity of payment mechanisms going forward. Swift is the largest by dollar value and volume. It's a good platform. There's characteristics so that people know that the money's sent and that the money is received. You can do the same thing in a Ripple environment. However, it doesn't have the acceptance yet. And so you will see private blockchain consortiums form over time. We sent money from CIBC to National Australia Bank through a Ripple proof of concept. Congratulations, we made a transatlantic phone call. That doesn't mean that that is a globally scaled application. So that's the piece that I think we will see in the future, but I think I'd be watching Google, Facebook, Alibaba, and the likes, because they are natural platform providers of those kind of services.
I think for us, frankly, we're quite encouraged to see other players coming in offering those services. I mean, when you think about the big six, there's basically omnichannel banks trying to provide every service from full service brokerage wealth management to the simplest kind of student checking account. And we take a very different view. Obviously, we can't aspire to be that, so part of that's the kind of the natural handicap we have. But we have 5 or 6 businesses where we think we're best in class. Multifamily apartment buildings we're really good at. Digital banking we hope we would aspire to be really good at. And we really would like to think about consumers saying, well, Equitable or EQ Bank may be great for my digital banking needs. For my high-value wealth management needs, I would go to another institution, and making it frictionless to move across those institutions. And really trying to wake up Canadians to the idea that we should shop your financial services. Actually think about every time you're buying a financial service with a credit card, a mortgage, don't just assume that you go to the bank that your parents went to and buy that service. They may offer great service from that, but shop around, and that's kind of part of our message. And then we want to be able to kind of win at the things we choose to compete at. And of course, that's a very different view than the large banks would have, where they want to kind of put their arms right around the customer. And I understand for a lot of customers, they may want that, but many others may want to think about being good consumers and how do you shop for better services. You never go into a bank branch and get sold an ETF. Why is that? I think we all know why that is. And so if you actually went shopping for those services, you'd buy different things.
Do you want to dispute that?
So you know what? I think the role of branches are not always well understood. I have gone into my branch to see an advisor when I'm at certain moments of truth where it's actually really reassuring to have somebody to talk to that's an expert on this. Those moments of truth don't happen all the time. Moving from one house to another, coming up to a mortgage renewal. Am I moving in a year from now? Or are we going to uproot the family and kind of do it in 3 years from now? So there comes time when it is really reassuring to have somebody to talk through an issue. Some people will prefer to do that over FaceTime. Some people will prefer to do that through live chat. I'm one of those that happens to like to sit down and talk through an issue with somebody. That's the beautiful heterogeneity that we have when you say that you're out there to serve every client. And so our branches provide a very effective way for us to deliver a client experience to those that want a face-to-face interaction. And our ability to more seamlessly stitch through our digital channels, our face-to-face channels, and those channels that bridge like FaceTime, that's the kind of future that we're building towards.
If I could just respond to that. I mean, it just seems to me that in Canada we're living in this kind of bubble where the banks will take that view. I was in Sweden a couple of months ago talking to the senior executives in Nordea, Nordea being one of the biggest banks in that part of the world. They downsized their branch networks from 1,000 to 500 over the last 2 years, and they plan to go down by another half or so over the next 2 to 3 years, which I thought was quite extraordinary in terms of a country that has very similar values to Canada. You would think that taking a branch out of a small town in Sweden would be a highly politicized kind of issue, and yet that's the way they felt they could best service their customers. A lot of it was around really having true expertise sitting in central branches, bigger branches where there really are people that can help you with sophisticated wealth management solutions, which is probably not true of, if you've got 1,000 or 2,000 branches across the country. The chances of a real expert sitting there at 9 o'clock on Monday morning to help you is quite low.
I'm going to give you last call for any questions out here. There's 4 minutes left. If there's a question, yes?
I'll address the question to Todd and to Andrew. So we've talked about customer empowerment. We've talked about the fact that customers today are more and more willing to give up their data. So as we move towards data portability and we move towards more sophisticated consumers, how do we, those of us who are incumbents, as well as those who are new, retain customer loyalty?
Well, I think customer loyalty is something you've got to win every day, frankly, and you've just got to do it by doing the right thing. We have no sense, we don't have loyal customers. We've only been a digital bank for 14, 15 months. I mean, so to assume that anybody's loyal at this point, or that our brand means much in the market is obviously a bit of a false feeling, although we see nice comments about us in the Twitterverse and so on. So I think it's just a matter of riding with the technology, riding with what's available to us, and doing the sensible things for the consumer. It's so obvious to me that so many times things are just bust with what's going on. My son needed to put his down payment on his student residence, and I said, well, that's easy. I'll do it. I was having to be in business on Montreal at the time. We'll do it by bill pay. You can't do it by bill pay. It's got to be there tomorrow, Dad. Oh, well, how are we going to do this? So we're going to get a certified check couriered to Kingston overnight in order to make sure his residence. I mean, well, that is just mind-boggling in this day and age. And then he went to Queens and he opened up an account because the ATMs belong to one of the big six, and it's impossible for me to transfer money from my bank to his bank every 2 weeks. It's not a possible thing as an automated process. I can go and do my Interac e-transfer every 2 weeks, and Dad's going to forget, and he's not going to have any beer money on the weekend. It's a disaster. Thinking about making those things, and I think this is where real-time rails come into it. Making it easy to do those things really is going to make the consumer more loyal to you if you actually sort of think through that, communicate your value proposition. And the challenge with every institution is that one thing doesn't force you to change banks, right? It's a collection of all those things. You don't go shopping for a bank account on the basis that you've got a kid that didn't think about things in advance. You have to think about the total picture. And so building your brand over time as being committed to that and living and being true to that, hopefully will build customer loyalty. And we're going to screw it up, frankly. It's much easier to criticize other banks than it is to do a good job yourself, and I'm very aware of that. You see things in our institution, how the hell do we do that? And we were trying with the best intent to deliver great customer service.
So you look at some of the greatest brands, and I'm always struck by the power of experience brands. So whether you look at a Disney or you look at an Apple, they have a very deep ability to sustain loyalty because they know what you want. They deliver an experience which is consistently in excess of those expectations. I don't know of too many data companies that actually inspire loyalty. So I think the issue is how do you deliver an experience that is seamless and is powered by a deep level of understanding about that client. So you're using data in a way which enriches their lives and delivers personalization. That, I think, is the route to how you build a relationship with your client. So we've chosen something clients expect us to be strong. They expect us to value our relationship with them, and they expect us to deliver an innovative experience. That is how we plan on winning relationships and sustaining loyalty.
I disagree with you that there are companies, data-rich companies, that don't deliver great experiences. I think Amazon is a data company. I think Netflix is a data company. Maybe they deliver a product, which is a movie or which is a book or a washing machine, but they're data companies. I think they have built enormous loyalty, and I think that, you know, someone's already used the expression, but I love the expression that your last experience is your next expectation. And we don't judge a bank by comparing the big five or the big six, or even with newer entrants. We compare it with how great we feel when we deal with Uber or Amazon, or when we get the movies we want from Netflix. So it's really important that we measure loyalty based on not just our own competitive industry, but measure it against the entire experience that customers are having.
Okay, we're actually at time, but I have one quick last question, and I want quick answers from all of you. But this is an unusual circumstance in the sense that great innovation and modernization has to happen with a lot of regulation. And in the past, Lib, you know, if the internet had this much regulation, we probably still wouldn't be using it. We still wouldn't know what it was for. What will drive this? Is it going to be driven by what customers need and want, or is it going to be driven by the capability of technology?
Actually, I'm not sure it's either of those. I think the governance framework that Payments Canada is putting in place is really, really important. And I'm on the executive committee of the Canadian Bankers Association. It's really hard for banks to cooperate even when we're trying. Yeah. So if you put the right governance and institutional incentives in place, then we can be successful. And that to me is critical. And then we can actually start to think about servicing our customers.
I think we have an obligation to serve all of our clients well. I think we have an obligation to use technology to its full potential. And I think we also have an obligation to do this quickly. We are going to do it as a community or an ecosystem. There's no other way to get there. But I think if we keep those three things in mind, we'll get to the right place.
And I don't think regulation will hold us. I think of a story. I worked for a Canadian company that had the first commercial packet switch network in the world, international. In the early 70s, we were told we couldn't deliver emails in Germany. Only faxes were allowed to be delivered because the Deutsche Bundespost had those regulations in place. So we agreed to it, and they had no capability of measuring it, and we delivered email there from 1972 on with great success. And I think when there's a will, there's a way.
Yeah.
All right. With that, please join me in thanking Todd, Lib, Andrew. Thank you.